Namaste. This week we will see about the savings bank interest, how it is calculated, what are the benefits. Savings bank earlier interest was paid in a non-friendly manner, in the sense interest was paid on the balance which was available from 10th to 30th, the least. For example, we are maintaining balance of say 1 lakh rupees from 1st of January, for example. Up to 10th January we had 1 lakh. So 10 days the bank was having 1 lakh rupees as our money with them. On 11th we have drawn say 90,000 from that account. So throughout the remaining days it was 10,000. And the last day we have drawn again 9,000 from that account. Only 1,000 was remaining on the last day, 31st January. So at the end of the month, interest was earlier calculated only for the least amount from 10th to the last day. So in this case, though 1 lakh was there for the first 10 days and 10,000 was there till the last day it came down to 1,000. So what was the earlier norm was only for the 1,000 rupees for the entire month interest was paid. So Reserve Bank of India, as we all know, RBI came into the rescue of the depositors and said that this is not to be followed, and a customer friendly approach has to come. So the new rule has come. The new rule is very customer friendly, and the depositors are getting the benefit of the money which they are keeping in the bank on any day. Now the new rule we will see. The old rule is old rule, so we'll forget about that. Now as per the new regulations and the new savings bank interest norms as regulated by Reserve Bank of India, all banks are following across the country. Yes, like for example, I have 1 lakh rupees, the same example, 1 lakh rupees in the first 10 days I am keeping in my savings bank account. So for 1 lakh rupees for the first 10 days, each day it will be counted as separate deposit amount for interest calculation. So for first 10 days it will be for the entire amount, 1 lakh rupees, every day it will be calculated. It will not be credited, but it will be for calculation purpose, it will be taken into account. Say the same example, on 11th day we have drawn 90,000. So that day onwards only 10,000 will be there, right? For the 10,000 each day, for the remaining 18 days, 19 days, it will be 20 days rather, it will be calculated. So last day we have drawn everything except 1,000 rupees, right? So for last day the interest will be calculated for the amount which was out balance there. That was 1,000 rupees. So 10 days the bank will give us interest credit of for 1 lakh each for 10 days, and remaining 10,000 for the remaining 20 days, and the last day it will be 1,000 rupees. So this way the interest will be calculated, not credited. Interest will be calculated in this way, and it will be credited every quarter. The interest will be accrued and it will be calculated on the daily balance in the savings bank account, and at the end of the quarter, every quarter the interest will be credited to our savings bank account. This is the one way of calculation. Here if we see like old interest rate, like when we would have read in the schools, interest is nothing but PNR by 100. P is for the principal, N is the number of period, and R for the rate of interest, correct? So here principal is what? Principal is nothing but the amount we have kept in deposit on that particular day. At the end of the day, what is the balance? That is called balance. So the balance is called principal, and N is number of days. How many days the amount was there, or how many months it is there, it is called N. And the R is nothing but rate of interest. For savings account, normally it ranges from 3 to different amount. So assuming that it is 3%, and the principal is whatever amount we are kept on that day at the end of the day. So the PNR by 100 is the same principle applicable here for savings bank interest calculation. Here product, there is product is a term normally bankers use. Product is nothing but amount kept and the number of days it was kept. Like in our example, 1 lakh rupees was kept for 10 days. So 1 lakh into 10 will be 10 lakhs. That is the product. For this product, 3% interest will be calculated. So it is nothing but again PNR only. So but banking they calculate this way. So this is about the interest, how it is calculated in this savings bank account. Of course, this interest is also as per the Income Tax Act. They are chargeable for income tax. That we will see in the separate episode. And there is another concept about the zero balance accounts or minimum balance requirement. Zero balance account of the Government of India was popularized the banking habit, enabled anybody with even without any money credited to the account. Initially, when we want to open a savings account, banks were requiring some minimum amount to be deposited. that amount varied from bank to bank, place to place. Like some banks were charging, quoting 1,000 rupees. Some banks, elite customers, they call and say that minimum 10,000 for opening the account or minimum 1 lakh for opening the account. That is one side of the story. The other side, government came with the financial inclusion. Everybody should have a banking channel, banking account. So they said, okay, you get all the formalities, but the account can be opened with zero balance. That is called zero balance account. No need to deposit any initial money. The money will come deposited through future credit into the account or government subsidies, direct benefit, direct transfer scheme that we will see about that. Whenever government was to pay something to the stipend or incentive to the citizen, through these accounts it will be credited. So for those purpose, the zero balance account came into being. So we have plenty of zero balance accounts through thanks to that. Almost financial inclusion, like people who are not in the banking channel, they were outside the banking channel, also came into the banking channel. That is about the zero balance account. Zero balance account doesn't mean that account will never have any balance. To start with, they can open the account even without any money. That is the zero balance account. Then minimum average balance. Like we say that zero balance account or minimum 1,000, 10,000, whatever is there. But at the end of the month, many banks have their own stipulations. Like you can keep whatever balance, but if the balance during that period, during the 1 month, for example, if the average minimum balance is below the threshold limit, they will be charging us a penalty. Like if one day we can, like the same example, one day we kept it 10 lakhs, one day when we kept 1 lakh, another 10 days, 20 days we kept 10,000, then 1,000 rupees. So all these things, 10 lakh, 10,000, 1 lakh into 10 days we are keeping. So that will be the product, correct? So that will be 10 lakhs. Similarly, 10,000 for remaining days except 1 day. That will be multiplied by the remaining like 20 days, correct? So 20 days it will multiply. That will come to 20,000. Then last 1,000 rupees will be for 1 day. So that way the product will be calculated. That is amount kept and the number of days it was kept. That is the product. So all put together, the sum of this amount will be divided by the number of days. Like for example, 10 days we had 10,000, remaining 10 days we have 5,000, remaining 10 days we have 1,000. All these amounts will be multiplied by the number of days and divided by the number of days. So that amount is the average balance kept in the account during that month. That average amount should not be below the requirement each bank has kept. So head is not going to fall. They will be charging some penalty if it goes below that. That is about the minimum average balance about the savings bank account. So of course, we also talk about liquidity about the savings bank account. Liquidity is nothing but easy to draw. Like it is hard and liquid, we say, no? The same parlance, liquidity is used in the banking terms also. Here, the savings bank account is more beneficial for us in the sense it is highly liquid. Highly liquid means just like that it can be utilized. We can lay our hand onto that and use it whenever we need it with least procedures, least formalities. That is called liquidity. It is easy to access. So the other form is the like term deposits are not that much liquid. Then about the interest rate, we have maybe heard about that risk versus reward. The higher the risk, higher the reward. Correct? So reward here is interest. Like if you are taking a risky decision, then the interest rate can be higher, return can be higher. Like even in the bankings, we would see nationalized banks and reputed private sector banks give us say 3% only interest, whereas there are some banks which will give even 5%, 6%. So based on the risk perception, the customer will decide if he wants to take that higher interest, even if it is a private sector unknown bank or small bank, they will go for that. But when you want to play safe and you want to invest in a bank which is trustworthy, it has a long standing, then we'll go for the public sector bank or the well established private sector bank, even if the interest rate is low. Then Reserve Bank itself is permitting some banks like cooperative bank, they will pay 1% interest more than what other banks are paying. Like public sector banks are paying 3% interest for our account. The same deposit, same period, if it is in a cooperative bank, they can pay us 1% more than what the public sector banks are paying. The main reason is the reach is limited. The cooperative banks are situated in a small place. They cater to the needs of the local population, correct? So to have them the benefit, so Reserve Bank of India permits them to pay 1% interest extra. Similarly, for senior citizens, people above 60, they are live only with the retirement benefits and the interest earned from the corpus which they deposited in the bank. To help the senior citizens to live a decent life after retirement, Reserve Bank of India permits the banks to offer a certain percentage of interest higher than what is applicable for normal persons. Like if 1 year deposits, assuming that the banks are normally paying 6% interest, they can give 25%, 6.25 or 6.5, even 7%, depending upon their what deposit requirement. They can pay extra. So in nutshell, at least about, if it is 6%, they can pay 6.25 or 6.5%. Normally, they will pay 50 basis points above the card rate for the senior citizens. So for cooperative banks, they will pay 1% extra, and senior citizen everywhere, whatever is paid in above that, better interest rate will be paid for the senior citizens. So these are the benefits which we have in the interest rates in the banking system. And of course, who can open account, how account can be opened, we will see in the next episode. Thank you.